Welcome to our video on how to start investing your money. Investing can be a great way to grow your wealth and secure your financial future, but it can also be intimidating for those who are new to it. That's why we're here to help. In this video, we'll go over some basic concepts and strategies to help you get started on your investing journey. First, let's talk about why investing is important. When you invest your money, you're essentially putting it to work for you. Instead of just letting it sit in a savings account or spending it on day-to-day expenses, you're using it to potentially earn more money through interest, dividends, or capital gains. This can help you achieve your financial goals, such as saving for retirement, buying a home, or paying for your children's education. But before you start investing, it's important to have a clear understanding of your financial situation. This means taking a close look at your income, expenses, debts, and savings. Having a solid financial foundation is crucial for successful investing, as it will give you a better idea of how much money you can realistically afford to invest, and how much risk you can handle. Once you have a good handle on your finances, the next step is to set some financial goals for yourself. Do you want to save for a down payment on a house? Or are you looking to build a nest egg for retirement? Understanding your goals will help you determine the best investment strategy for you. These goals should be specific, measurable, attainable, relevant, and time-bound, or SMART. For example, I want to save $50,000 for a down payment on a house within the next 5 years is a SMART goal. Having clear goals will help you stay focused and motivated as you start investing. It's also important to consider your risk tolerance, which is your willingness to take on financial risk in pursuit of potential rewards. Some people are more comfortable taking on higher levels of risk in exchange for the potential of higher returns, while others prefer a more conservative approach with lower risk and potentially lower returns. Now, let's talk about the different types of investments you can consider. There are many different options out there, and it's important to find the right one for you, based on your goals, risk tolerance, and investment horizon. Some common types of investments include stocks. These are shares of ownership in a company. When you buy stocks, you're betting that the company will do well and the value of the stocks will increase. Stocks can be volatile, meaning their value can go up and down quickly, but they also have the potential for high returns over the long term. Bonds. These are loans that companies or governments make to investors. When you buy a bond, you're essentially lending money to the issuer in exchange for interest payments. Bonds tend to be less risky than stocks, but they also have lower potential returns. Mutual funds. These are pools of money from many different investors that are managed by a professional fund manager. The fund manager uses the money to buy a diversified portfolio of stocks, bonds, and other securities. Mutual funds can be a good way to diversify your investment portfolio, but they also carry fees and expenses. Exchange-traded funds, ETFs. These are similar to mutual funds, but they trade like stocks on an exchange. ETFs offer diversification and low fees, making them a popular choice for many investors. Real estate. This can be a more hands-on investment, as it involves buying and owning physical properties, such as rental properties or vacation homes. Real estate can be a lucrative investment, but it also requires a lot of research and due diligence, as well as a willingness to take on more risk. Once you have a clear understanding of your financial goals and risk tolerance, you can start building an investment portfolio that aligns with your needs. This may involve diversifying your investments across different asset classes, such as stocks, bonds, and cash, to help mitigate risk. One important thing to keep in mind when building an investment portfolio is the concept of asset allocation, which is the way you distribute your investments across different asset classes. A well-balanced portfolio typically includes a mix of stocks, bonds, and cash, and the specific mix will depend on your financial goals and risk tolerance. In addition to asset allocation, it's important to consider the specific investments within each asset class. For example, if you choose to invest in stocks, you'll need to decide which individual stocks to buy. This can involve researching the financial health and growth potential of different companies, as well as considering factors such as their industry, location, and management team. Once you've built your investment portfolio, it's important to periodically review and adjust it as needed, to ensure it continues to align with your financial goals and risk tolerance. This may involve rebalancing your portfolio to maintain your desired asset allocation, or selling off underperforming investments and replacing them with new ones. Once you've decided on the types of investments you want to make, it's time to start putting your money to work. There are many ways to invest, including through a brokerage account or a financial advisor. Each option has its own pros and cons, so it's important to do your research and choose the one that's best for you. A brokerage account is a type of investment account that allows you to buy and sell securities, such as stocks, bonds, and mutual funds. To open a brokerage account, you'll need to choose a brokerage firm and complete the necessary paperwork. Most brokerage firms have online platforms that make it easy to buy and sell investments. And many also offer educational resources and tools to help you make informed decisions. If you're not comfortable managing your own investments, you may want to consider working with a financial advisor. Financial advisors are professionals who can help you create a financial plan and recommend investment strategies based on your goals and risk tolerance. Keep in mind that financial advisors may charge fees for their services, so it's important to carefully consider the cost before deciding to work with one. Another important aspect of investing is understanding the fees and costs associated with different investment products. Some investment products come with high fees, which can eat into your returns over time. It's important to understand the fees associated with your investments and consider whether they are reasonable given the potential returns. Another factor to consider when investing is the time horizon, or the length of time you plan to hold your investments. Some investments, such as stocks, are more suitable for long-term goals while others, such as bonds, may be more suitable for shorter-term goals. It's important to consider the time horizon of your investments when deciding which ones to include in your portfolio. No matter how you choose to invest, it's important to remember that investing carries risk. The value of your investments can go up or down, and there is no guarantee that you will earn a return. It's important to diversify your portfolio, which means spreading your money across different types of investments to reduce the overall risk. It's also a good idea to have an emergency fund set aside for unexpected expenses, so you don't have to sell your investments at a loss in a pinch. Finally, it's important to be patient and disciplined when it comes to investing. Successful investing often requires a long-term perspective and a willingness to ride out market ups and downs. Don't get discouraged if you don't see immediate returns, and remember to regularly review and adjust your investment portfolio to make sure it's still aligned with your goals. Thanks for watching this video. We hope this video has given you a better understanding of how to start investing your money. Remember to do your research, set clear financial goals, and choose the investment options that are right for you. With a little planning and discipline, you can set yourself up for a secure financial future. For more tips and resources, make sure to subscribe to our channel and check out our other videos. Happy investing!